All right, hey traders, TG Watkins here. It is July 27th when we're recording this, and it is Wednesday. So it is not just a regular Wednesday today, it is FOMC Wednesday today. So we have quite a few things on the docket, and yeah, it's going to be pretty much no shortage of activity later this week. Leading up to this, the markets have been kind of pulling back, basically anticipating FOMC. We also have GDP coming out on Thursday, so that's going to be some more news. Plus, we have a ton of earnings coming up. We just had Microsoft and Google, so we're going to go through that and kind of show you a couple things and see what's going on with the market. But for the most part, I think we're just going to be waiting to see what the FOMC does today. My understanding is that there was a little bit of talk about maybe a 100 basis point raise since Canada just did that. So like, well, other places are doing it. Maybe we're going to be doing that here in the States. But my understanding is that the Fed heads and the Feds and whatever, Yellen and Powell and all the people who've been out there around and touring, they were basically trying to guide back to 75 basis points. So I think that it should be pretty much baked into the cake that we're going to see 75, and that's that. Now, how the market's going to react, we don't know. Maybe there's an idea that if they do 75, it's not as aggressive as 100, and so maybe the market's going to like that and they're okay with it. I don't know. So we're just going to have to wait and see. I do have some thoughts and some ideas of what's going on with the market. We'd like to see kind of the bottom here being hammered out, and we'd like to see the markets continue to move higher, but it's just not entirely confirmed yet, and I don't really want to be stepping in front of a train like that. All right, so let's kind of get into this. Is what I'm seeing with the S&P, what we've been talking about for the last couple weeks and trying to see if the market's going to go higher is, number one, oh, that's what I forgot. Give me just 1 second. So what we're looking at is on the daily chart, you can see that there we had a lower low in price, but then you can actually see that we had a higher low right here. So lower low in price, and we actually had a slightly higher low on the Moxie indicator. That was actually some divergence. It's like a double bottom in the Moxie indicator. So that was something that actually started to help move price up. It was basically a capitulation right in from here. That was the not this last time, but the time before, where we had CPI numbers, and it seemed to be pretty unexpected, at least as far as those numbers go. And so the market really rolled over pretty hard about that. That seemed to be a bit of capitulation, and since then the markets have been extremely choppy, but they've been working their way higher. And so we're going to see if that trend can kind of continue. So we've been seeing some progress. We now have the 8 over the 21 on the daily chart. We do have price working its way past the daily 50. It's going to be tough and challenging. Definitely not clean or easy. And we've been seeing some pullbacks, but then now that we had Microsoft and Google come out with earnings, they're up. That seemed to have boosted the market up a little bit too. Now, again, do we have any follow through yet? Not quite sure. We got FOMC, we got GDP, we've got more earnings. It's going to be a tough couple of weeks going forward to see what we're going to do. That being said, generally speaking, I have been looking at price on the S&P, trying to move up and float up to the weekly 21, maybe even just a little bit beyond it. Let me see if I have, let's see which one was it. Anyway, I got a couple lines drawn on here, quite a few. Let me go back to that the blank one, because what I'm also seeing is that there is a line. If we kind of look here and we do this, there is a bit of a level right in through here. If you kind of look right there, and we kind of level that out. And so there's kind of something about $415. It is just over the weekly 21, so we could see price kind of overshoot that. That's another reason that if price can get up there, I am kind of looking for it to go up here. The issue that I have is it could end up being like Google, in that it might reach there, but it might do it in such a choppy, awkward way that it doesn't really do us much good. So if you, let's say Google, is there anything other than very short-term trading that you could have done with this? Probably not. I definitely couldn't be doing anything with this unless you could be looking at these trend lines and basically trade high to low, high to low, high to low. But then look at this last time. It broke these particular trend lines, but it went down to a double bottom. So it's like, okay, one trend line will be working for a while until it doesn't, and then something else will work for a while. So we've got that. And the thing I wanted to point out is that look at Google and how it actually hit the weekly 21 a few weeks ago and then kind of rolled over. And what if we kind of get the same situation with the S&P, that the move from price being low to high, even though it goes, say, from point A to point B, and yes, there is height, look at the noise in order to get there. I mean, look at what we're looking at on the daily chart in order to get up there. And so that's a little bit of a concern that I have with the market, is that, well, we might reach that point and we might even go a little bit further. But how actionable is it? And it could be, it just doesn't seem like it's going to be a very smooth ride up there. You know, some of the other things that we've kind of been talking about, we're looking at names like ZS, and you can see here, kind of doing the same thing, mostly trending, or channel trading in through here, and just kind of oscillating sideways. There's really not a whole lot to be doing on something like this. It's very challenging in order to figure something out, unless you guys can do very short-term trades or somehow figure out that channel trade, and you can trade from high to low through that. So then we look over at something like, so we got Google. How about Microsoft? Yeah, good morning, guys. So Tommy, we got you over there, and Jimmy and Mirza, thank you. So Microsoft, yesterday I was on the mic talking about this, and I said, yeah, it doesn't look great. It definitely looks not strong. But at the same time, it hasn't really broken below this level, and yesterday it was right at that level. And with earnings coming up the following day, I said, look, anything can happen. So this is one of the reasons why it's like, I don't really want to be taking a trade for earnings, like going into earnings. Now, if I'm in a position, I'll kind of assess, but it's not like I'm going to step right in front of an earnings trade. It's just not my style. And this could maybe be one of those reasons. Like, look at this. This thing looked like it was going to continue to melt down lower, but it bounced right at that low, at that previous low, to where it's actually holding up for a little bit. So now we have that. And it seems as though that the expectations for earnings is pretty low, and as long as companies don't totally crater, the analysts are like, well, we've kind of already priced this in, and so, this isn't as bad as we thought, or we were expecting it, and so, the upside is there. And that's kind of where what we're at and what we're seeing. Something to note as far as Microsoft goes, there has been quite a lot of positive divergence coming in on the daily chart. And notice that the Moxie indicator is now going positive. Now, that doesn't necessarily mean a whole lot in this current market, but it is something to note, especially if you're on the short side, that something like this may not be a very good candidate for the short side because, well, it has been trying to hammer out a bottom in through here, and it doesn't want to go lower, and the Moxie indicator is moving higher. So there could be an opportunity that if price goes higher, we might eventually see price come up to the underside of the weekly 50. Again, how easily is that going to be in order to trade up there? I don't know. It's been challenging stuff in through. It's like the same thing with Google, that it did actually hit that weekly 21, but it did it in a very, very messy, choppy way. Then, things like Apple. I look at Apple, and just as I said with Microsoft, I was like, hey, just an idea. We could see Microsoft come up and hit the underside of the weekly 50. Well, look, Apple did the same thing. So it did manage to get up there. Now, it did a pretty cool move, very nice. It did a little trampoline move right there on the hourly chart. That is when price is below the 50, but the Moxie indicator is above 0. It's a very bullish situation when it's confirmed. And then you can see it followed the hourly 50 very, very nicely. Now, at this point, again, we have earnings, so I would be careful about that. Whatever you want to do the earnings roulette. But I would be looking at this and saying, this is starting to come up to resistance here on the weekly chart. It's coming up into previous price congestion, and we have only the first move over the daily 50, and typically I like to see price pull back to the 50 at some point, and that might be sooner than later. So just kind of keep that in mind. We could have a 50, 200, 50 maneuver as well, and so I would generally be looking for a pullback on Apple at some point back to the daily 50. Is that on earnings? I don't know. But it's something that I would consider and keep in mind, because also on the weekly chart, this is about the arch of the foot. So as a reference to everything I've just said, everything I just pointed out about Apple with the arch of the foot, the 50, 250 maneuver, we're even starting to see some negative divergence on the hourly chart. Take all of that, and then you can apply it to Domino's, and you can see what it did. So dominoes right here, arch of the foot, right? And then you can see here 50, 200, 50 maneuver. So, and then we could even say here negative divergence on the hourly chart. And these are the reasons why that I say that Apple at some point should pull back to at least the daily 50, and then we see where it goes from there, because that's the kind of pattern set up in flow that I see with charts, and I can verify that in as an example with dominoes. Oh, nice, Nasir. So, okay, you're asking about Apple, so review that. Confused by the daily showing well, but weekly and hourly Moxie have negative divergences and below zero. We even have a Moxie buy signal on the daily now. Right, so Nasir, I think I pretty much answered all of that, but let me just go back and address that Moxie's trigger right here. So this is what I call late. This is the tail wagging the dog. You don't want the Moxie indicator to be firing this far after the move and this far above the 50. You want the Moxie indicator, ideally, to fire below it crosses the 50 or at the same time that it crosses the 50. Like this is a good one. That fired pretty much right at the same time, and then you also got a pullback, which then continued. So this is what I'm saying, is that this move it's already, I think it's already happened. Like, I think this is the move, and I think you should generally be looking for and expecting a pullback to start developing. There's another one. Let me come over here and see if I can. Well, let's get that. There you go. Let's see. We'll look at this, a bigger time frame, and then yeah. So here are two good examples right here on Apple. So you'll notice, you see here how the Moxie price trigger fired fairly late after the 50. Again, it's late. It's the tail wagging the dog. But notice here, it fired much closer to the 50. It was still a little bit late, but much better. And look at the subsequent move. That's my point. So if you look at where it is right now with here, I would say that's late. And I would be looking for price to pull back. And you'll have to see if it wants to pull back and actually into support. We'll have to look at that later. We've got all the rules for that, everything I show you and tell you how to look for it. But yeah, the fact that it's firing now doesn't necessarily mean anything. It means that it's late. And so we'd have to see what it's going to do on the pullback. Yep, there you go. All right, so let's see. Vet on oil. I don't have a super good read on some of this stuff. We've seen UNG go through the roof after a bounce, but then we saw USO pretty much just stay quiet. We've seen LNG go up, but GLNG is going sideways. This market is still very challenging. There isn't a good trend for a lot of these things. So many names are still going sideways. Some names are up, some names are down. I mean, just look at the bifurcation between the FANG stocks. I mean, we got Netflix that just got pummeled. We have Adobe's down, and Microsoft has been chopping sideways. Google has been chopping sideways but down. Amazon is kind of up. I mean, these things are all over the place. As far as VET goes, the only thing I can kind of mention is just beware of a double top. That tends to be a thing. And yeah, the Moxie indicator is still below zero, just like it was before. And then MVS, what I'd be looking at is, you see how there's a gap here between price and the daily 50, and there's a gap here between price and the daily 50. Again, I would generally expect at some point price to pull back and test those moving averages for support if it's going to keep going higher. So that means that for me, as price continues up like this, the further and further it goes, then the farther and farther away it gets from that moving average, the closer and closer I think we would be getting to a pullback to test that. Now, again, testing doesn't mean confirming, it just means coming down, checking it out, seeing if it's going to be support or not, and it could go lower or if it's going to bounce. You can see here on the hourly chart where price finally broke down below the hourly 50, and then it just kept going. And I would imagine you're probably going to get a similar something through here at some point, you know. So if you're long, fine, keep going long until price pretty much shows you and breaks that it's going to go back down below the hourly 50. If you're looking to initiate, I'm not sure that this is the most ideal place to initiate. That would kind of be like trying to initiate along here. Yes, you might be right for a day, but then it's going to probably roll back on you. So I wouldn't really want to be initiating in through here. If you're in from lower, great. Just tighten up your stops and, you know, keep it going as long as it's going to go up. Speaking of, let's see, the difference between, you know, UNG and USO. which I know they're different products and all that stuff, but it's just very interesting to see that two different, basically oil, hydrocarbon names are responding so differently. It is very interesting to see that they are not moving at all like each other. Now, I think Tommy Boy and I were talking about this today, and we've been talking about it over the last, I don't know, week or so, to where this thing has had an astonishing run. I mean, it's pretty impressive what this thing has done. But that being said, notice we are starting to come up here to a real double top. I mean, that's a previous high. And it's super extended because look at how far price is over the third ATR, and look how far away it is from the daily AEMA. I mean, this thing is wildly extended. And then you can also see here on the hourly chart, it has not touched the hourly 50 for the entire trend of this move. I mean, its entire situation hasn't done it. The only thing it's been doing, it's been following the 15-minute 50, which is fine until it starts to break the 15-minute 50. And at this point, I would generally expect a pullback. Now, I don't know how far the pullback is going to be. We don't know how clean it's going to be. We don't know what it's going to do. But if you're long, I'd say you should cash out for these reasons. If you want to short it, okay, it might be a little bit challenging. But I think, I think this is kind of running at to the point where it's already too extended and it's starting to pull back because it's starting to cut through the 15-minute 50, and there's a big gap between price and the hourly 50, which means that once this thing starts to move back down, it's got a bit of a head start because there's so much air here that it can actually start moving and getting some momentum before it actually even hits that moving average, and then it'll maybe bounce a little bit, and then I suspect it will probably go below the hourly 50. So if you wanted to trade this, I would imagine trading it down to the daily 21. Again, it's a moving target, so wherever that daily 21 is going to end up over the next few days, I would imagine that could be the target. So that's how I'd kind of go with that. Oh, Loco no Joko, I feel like I haven't seen you in a while. I didn't see what's going on with the housing numbers. Do you have anything? The only thing I could kind of look at is, let's see if the CaseShiller home numbers came out. And let me look at this. So if we look here, this is the CaseShiller home index. And I don't know when this last one was plotted. Yeah, it looks like May, they've done the May, but we don't, or April, we don't have like May, June, July. So maybe this one hasn't been reporting too recently. But you can see here that's the CaseShiller 20 city composite home index. Let's see what the other one looks like. So we'll do this one, and this is a 20 city, same thing. How about this one? Maybe this is the overall. I want the big one, the national. Yeah, CaseShiller U.S. National Home Price Index. And you can see this thing, I mean, talk about a hockey stick maneuver. Yeah, so they're still on April as far as that goes. But man, talk about a blow off top and going parabolic. That is just unsustainable. So this is something I've been talking about in quite a few of my presentations as of late, and just saying this is ridiculous. And we should be expecting at some point that this is just going to get too crazy and we should be seeing a turn. So if you can, it'd be great not to buy a house during this time, especially now that interest rates have pretty much doubled for the housing industry. Now, here you can see back, let's go back to, this was 2006, basically when it peaked. Do you guys see the similarity? You notice here how, there's kind of a nice tracking like this, and then what happened? It started going parabolic. And you can see it started to put in a gap between price and the moving averages. And then eventually, you can see they leveled off, and then they got underneath those moving averages, and then started to follow the moving averages to the downside. So this is kind of something that it's going to take months, maybe even a couple years, but I'll be watching this because it's very interesting to just see how the housing industry and the prices there really actually kind of move in a very similar way to charts, to stocks. It's still a market. So I always found that really interesting. But as far as I guess the numbers today or something like that, I'm not up to speed on them today. All right, so let's see. Roland, you're looking at Amazon. Do you think Amazon will perform similar to Microsoft earnings tomorrow? Well, that is a total crapshoot, so I cannot say for sure because it's just a roll of the dice. But if I were to just look at the charts, I would say that it is trying to put in a low and it's trying to move itself back up. It looks like it is trying to stay over the daily 50. We have the hourly 200 starting to try and angle up, and we have the hourly 50 over the hourly 200. That is different than back here where we had the 50 over the 200, but notice that the direction of the 200 was still down. At least now it's flat to slightly up. So it has changed. You could also see that back then the difference was that price was underneath the daily 50. Now you have price over a flat daily 50. So it does seem as though things have changed. They are trying to move up, but it's a very challenging time. It's just kind of having a tough time. And on the weekly chart, we still have a weekly 8 below the 21, and so we still have a lot of negativity. We still have a moat that's to the downside. So before you can ever really get price to come up like this, you're still probably going to have to do some work in here. That work is very similar to what I'm showing here on the daily chart. Like you see how the 8 is below the 21, and you see how the 8 is below the 21. What did it take on the daily chart for price to narrow the distance between the 8 and 21 such that you get the 8 over the 21 and then you can get a move? And so if we see this, if this is kind of something similar like this that needs to happen here, think about how many weeks it's going to take. Because if this took several days, then it could take several weeks to do something like that. And going back to then Google, I mean, it could just hang out for a long time. Like that's the unfortunate side of what we're seeing here is this has been going sideways for a very, very long time. And again, unless you guys are short-term traders or you can see some opportunities or do this channel trading and you can kind of sell theta on each side, this is not a swing trader's environment. So I just haven't really, other than trying to look for a trade going into the stock split, which really didn't give us much of anything, it's going to be hard to really kind of pick anything out from this. Even Tesla, they had earnings, great, but then I figured they were going to pull back on earnings, which they did. But now they're bouncing off the hourly 50, and I don't know if they're going to continue up from here. So that's kind of the challenge, is being stuck between a rock and a hard place with this market right now. But if you look here on the daily chart and why I was looking for a pullback, 30 ATR, gap between price and the 8 EMA. You could also see that same gap here between price and the hourly 50. So I don't know what to say about some of these things because they're just doing a ton of chop. Roland, we're just going to have to wait tomorrow to see how earnings work out for Amazon, and then also just how the Fed, FOMC, all that kind of stuff comes out. We've got a pretty crazy couple of days coming up. Let's see, Loco No Joke about those pending home sales down 8.6%. Yeah, I've been hearing things similar. The estimate was 1 point. Yeah, sounds like what was the Philly Fed Manufacturing Index? They were expecting like +1 or -1, and it came out to like -12%. So yeah, talk about missing numbers on that one. And as far as the pending home sales or anything else, yeah, I've been hearing things that pretty much everything's falling off a cliff. The sales have really dried up. Just house on the market dried up. Everything is just kind of put to a screeching halt. The party time was when the Fed had the rates at historical lows. Of course, that's going to goose the housing market. But now that rates have gone from 3 to 6, whatever, something like that, they've doubled. It's going to really put a kibosh on people wanting to buy houses, because not only have interest rates doubled, housing prices have stayed mostly the same for now. Some have kind of rolled over a little bit, but prices are still staying the same. So now it's just like the worst thing for a buyer. Housing prices are high and interest rates are high. And if it's like, why would I want to buy right now? And I think that's what's kind of happening with the housing situation. Let's see, Nick. Let's see. 15-minute split makes me think those moves are weak. Yeah, well, that's probably true for, I think it was VET that we were talking about. But let's look at ARRY, since you're looking at pretty good for a long. Yeah, not too bad. Now, ARRY, if I understand, that is solar. And let me look at the solar ETF next, because EMPH, which I think I see Nasir, yeah, you were talking about EMPH. Feel like looking at EMPH. Should I have faith in it from late May, mid-June? Tried at 206, but stopped at 196. Maybe we should set a stop lower. Okay, let's see. Let's look at Array, because I think that is solar. And we'll look at the solar ETF. Now, talking about that moat that I was talking about with Google or Tesla, all that, you can see here that on the weekly chart for Array, ARRY, that moat is non-existent to the downside. In fact, we actually have the 8 over the 21 now. So if price wanted to go higher, the weekly chart would support it based on that 8 and 21. You could even see we have the leg, we have the heel, we have the arch of the foot, the ball of the foot, and this is the beginning of the elf toe. It's a really weird looking one, but the patterns are still there. And then if you look at the daily chart, price down, Moxie indicator up, sure. And then also you can see a 50, 200, 50 maneuver in through here. And then even on the hourly chart, you could say double bottom, positive divergence, and it looks to me like it held the hourly 50 right there as the Moxie indicator has been positive. So it is looking pretty good, but it needs to continue to look good. It needs to continue to hold the daily 50, and it needs to get past the daily 200, and it needs to get past the weekly 50. And if it can keep doing that, then great. There can be a move to the upside. And if we look at TAN, as far as the ETF, we were just talking about this yesterday. I really wish I could remember who I was talking to about this, because I said that it's been doing this really long 5250 maneuver in through here, just back and forth, back and forth, back and forth between the 50 and the 200. And I said, well, it's been basically proving the daily 50. It's been holding. And we talked about the 8 and 21 on the weekly chart. And I said, if this thing is going to go, it would at least try and give it a shot right here, because you can see price flagging sideways right into an uptrending hourly 50. And I said, it's kind of do or die. It's either going to work or it's going to not, and it's going to fail the other way. And I would say it's working right now. So that looks pretty good. And you can see here, it is trying to get past the 200 again. It's kind of had a couple times where it couldn't do it before, and it's trying to get past the weekly 50 again. So this seems reasonable, but you're going to have to keep following it and just make sure it actually does it, because we don't want to run into a situation where they fail it again. The one thing that I'm looking at this that helps set this up as a potentially better run is look at this. You see how each time these tried to move up, notice the giant gap that they put in between price and the hourly 50, right? So if you look at that big gap. Well, what about here? No gap, right? Price actually came up, flagged sideways into the 50, and then moved up. Nice. That's really good. That's actually pretty constructive, because it flagged nicely until it actually hit the moving average, and that helped push up. Whereas these, they kind of just exploded and then put a gap, and exploded and put a gap. They were unsupported moves to the upside, so they came back down. And what we're looking at currently does look much more constructive. And then if we look at EMPH, I think that is the reason that the solars and all that are starting to move up, is EMPH had earnings and doing pretty well. Again, very, very choppy. It has been really, really tough in through here. But what you can see is price has basically been holding the daily 50. I can't really read too much. Like the hourly chart has just kind of been all over the place over here. But what you can see is price flagged very nicely sideways into an uptrending hourly 50. It did it on earnings, so that's a little tough to work with. But other than that, this thing's looking pretty good, and it looks like it's finally starting to break out of through here. So that's if you're asking about EMPH. Let's see, you said that mid-July was a trampoline move. So mid-July on the daily, slightly, yes. So right there, you could say price dipped below the daily 50. The Moxie indicator was above 0. Yeah. Or you could just say price bounced off of the daily 50. Kind of either way you want to look at that. And no, I don't see any elf shoes in here. I could, if I wanted to, I could pull one out right here. You could say leg, heel, arch of the foot, ball of the foot. There's the elf toe. But yeah, as far as this current setup, there was no elf shoe that did this. It was really just a flag into an uptrending daily 50 and another flag into an uptrending hourly 50, and basically just kind of holding nice and tight there on the weekly chart. And again, it came out to earnings. So yes, the chart was looking good into earnings, and then earnings was the catalyst to get this thing up. So, all right, guys. Well, that is my time. Apparently flies by when you're having a good time. And let's see what happens next with the FOMC and then GDP tomorrow. So hang on to your hats. Okay.